from the heart of where innovation, money, and power collide. In Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
I'm Caroline Hyde in New York, in for Emily Chang. This is Bloomberg Technology. Coming up in the next hour, a feud turned move. Elon Musk joins the number of other executives who move out of California and in to Austin, Texas. Plus, breaking up Facebook is not the first step to fixing the social network. It's the only step. That's according to Senator Mark Warner. Our conversation with him later this hour. And while China continues to crack down on big tech and cryptocurrencies, part of the Southeast Asia are capitalizing on that moment. We discuss how the region is looking to attract digital innovation. First, we'll get you that and, of course, the reaction to the jobs data, all-encompassing here at Bloomberg. And U.S. Secretary of Labor Marty Walsh says the September jobs report shows a continued strain on employment from the COVID-19 pandemic. He cited concerns over the Delta variant and people changing careers as some of the reasons for the weak jobs numbers. Take a listen to what he told Bloomberg earlier.
It's about the pandemic, and this is not just an American issue. This is a worldwide issue with participation rate in the workforce. We clearly have more work to do. People are concerned about the Delta variant. People are concerned about their health, and I think, quite honestly, a lot of people are reevaluating their work-life balance and changing careers.
194,000 jobs added, much less than the 500,000 as was consensus. Market kind of took it in its stride. Let's get that and all the market moves. Bloomberg's Mike Regan is in the house, of course. Take us through it, Michael.
Well, yeah, Caroline, a choppy session, but not a very dramatic session compared to some of the drama we've seen in recent weeks. As you pointed out, a disappointing headline number, but the unemployment rate did drop, and the revisions to the prior months were pretty solid. So the consensus clearly is that it's not enough to affect the Federal Reserve's schedule for tapering its asset purchases. S&P jumped a little bit after the report, but as you can see, a very choppy session, ended lower, all the major benchmarks lower, tech really leading the way. The NASDAQ 100 down about 0.5% for the biggest drop among the main benchmarks. And that leaves the NASDAQ 100 down about 5.5% from its peak in early September. But it did eke out its first weekly gain in 5 weeks, a small gain about 0.2%. Caroline, obviously everyone wants to know about Tesla. Tesla was the second biggest drag on the NASDAQ 100
Yeah,
tonight.
talk to us. Why?
Well, like many companies, whether it be Sherwin-Williams, Nike, Bed Bath & Beyond, the list keeps growing of companies saying this supply chain disruption is real. Elon Musk yesterday at the shareholder meeting saying that he still expects to maintain sales growth above 50%, but it all depends on if they can get all the computer chips they need. And not just chips, but ships. He's worried about ships. Not enough shipping capacity to get all the parts they need. So he said they're spending a lot of money actually flying parts around the world rather than sending them on ships. Longer term, they set a goal for 20 million vehicle sales a year by the year 2030. Needham analyst Ravinda Gill not quite buying it. She's saying that's a little ambitious given how much they'll have to expand their manufacturing footprint between now and then. So Elon Musk, once again, likes ambitious goals and no difference this week.
Mike Regan, with all the market moves and digging in on Tesla, we're going to dig in that a little bit more because the big news, of course, other than the chips and the ships was the moving headquarters from Fremont, California to Austin, Texas. Take a listen to what CEO Elon Musk had to say.
We will be continuing to expand our activities in California. So this is not a matter of sort of Tesla leaving California. As I said, our intention is to actually increase output from Fremont and from Giga Nevada by 50%. So, but we're just hitting the sides of the bowl.
Dana Howell joins us for more. So it's not about California now? It's not about that feud?
Well, I think that the big reason is really affordable housing. I mean, Musk himself moved to Texas last year because he's the wealthiest person on the planet and Texas has no state income tax. Musk has clearly been frustrated with the way that California handled the coronavirus pandemic, and he's had, feud with local public health officials. But fundamentally, this is about growth. I mean, Tesla has big plans to grow, and they are building a brand new factory in Austin. So it makes sense that their headquarters would be where the shiny new factory is. But I think it's like, it's kind of like, they're moving in their corporate headquarters, but it's not like they are shutting down Fremont and Palo Alto and demanding that their 35,000 California employees all move with them. I think it's just that this is a company that's growing very rapidly, and now if you're a young engineer and you want to work at Tesla, you can live in Austin. You don't have to live in the Bay Area where the cost of housing is prohibitive.
So Dana, is the pool of talent rich enough at the moment for them in Texas, in Austin in particular, or are they thinking that people will move with them? They will be some sort of anchor company?
I mean, I think that some people will move to Austin who already live here in the Bay Area. And I think if you're a young, talented engineer and you really would like to be able to buy a house at some point, Austin is more affordable than the Bay Area for sure. But Tesla draws talent from all over the country. I mean, and I just think that, Musk is kind of consolidating his empire in Texas. SpaceX has a huge base of operations in Boca Chica. Musk is living in Boca Chica. The new factory is going to be like a crown jewel. The headquarters, it's just sort of all makes sense that he's going to try to consolidate and be, in the center of the country. It's easier for him in terms of travel.
A lot of wins there, it feels. Dana Hull, thank you so much for breaking down that move. Now, of course, during the shareholder meeting, Musk acknowledged that the ongoing chip shortage was what Mike Regan was just talking about, stating he believes it might abate, but might go on for a couple more years when it comes to the chip shortage too. He admitted logistically they are challenged. Garrett Nelson of CFRA joins us to discuss. Let's talk about chips and ships first before we talk a little bit more about Texas. And I'm interested in, Garrett, actually it seemed to be a bit of a knock. Before we all thought Tesla was somehow sailing through this whole chip crisis, let alone the supply chain issues in shipping and the like, but they're not.
That's right. Thanks for having me. I think what you saw last night was Elon Musk really dialing back expectations to give themselves a little more operational flexibility with this ongoing uncertainty regarding the chips and the ships. Supply chain constraints are very real right now. But this is not something that's new. Tesla has done an incredible job navigating those headwinds over the last few months and in recent quarters. So, Intel came out in July and they said that the chip shortage would probably persist for another 1 to 2 years. So I think at that point, a lot of investors really woke up to the realization that this was not a near-term problem. In fact, it was going to persist well into 2022 and perhaps 2023.
So what about, therefore, their production goals? What are there for about hitting their targets of sales? Will it be crimped? Are you positive on it?
So I think why the stock was down today, a little over 1%, is that Elon Musk sort of quietly dialed back the expectations as far as first production of the Cybertruck as well as the semi-truck. He's now saying first production of the Cybertruck by the end of next year and then the semi-truck in 2023. So he's kind of pushed out that timeline by a quarter or two relative to what he was saying before. So I think that's why the stock was a bit weaker today. So yeah, I think that's the primary reason. The other concern is Tesla really has some bona fide competition in electric vehicles, which is competition that they really haven't had up until now. Lucid will have first deliveries of their Lucid Air vehicle later this month. Now that's a vehicle with a 520-mile EPA-rated range. That's more than 100 miles higher than the highest rated range on a Tesla vehicle. So I think you're having some competition that's starting to show up, and the traditional automakers have really increased their investments recently in electric vehicles.
Yeah, exactly. Some of those undercutting in terms of prices coming from GM at $30,000 to take on the likes of Tesla's price point. What about, interestingly, just to dovetail with what Dana Hull was saying, this move to Austin? I've heard reporting and some takes, some analysis that they're going to Texas to help the Cybertruck, to help to sort of be at one with the more mainstream American and sell to them. Is that really a take?
It is. Texas is the largest pickup truck market of any state in the U.S. by a pretty wide margin. So I think there is something to that. But I think it's mainly, as Dana mentioned correctly, it's mainly about cost of living, but also their footprint, their geographic footprint there. They have lots of room to expand that factory in just outside of Austin. So, and Tesla is certainly not alone. Oracle and Hewlett Packard recently left the Bay Area for Texas. So, this is a broader trend recently that we're seeing.
We want to thank you, Garrett Nelson of CFRA. Great to have some time with you. Thank you. All things Tesla now. Meanwhile, we've got new details about what the White House plans to do about crypto oversight. Bloomberg News has learned that the Biden administration is considering an executive order that would direct and coordinate agencies on cryptocurrencies, including financial, regulation, economic innovation, and national security. Now, even if Biden doesn't sign the NEO, the administration is still expected to make public its crypto strategy. Now, coming up, an app that soared in popularity during the pandemic is now being valued at $10 billion. We'll be talking to the COO and CRO of the productivity software, Notion. That's next. This is Bloomberg. Revolutionizing remote work. The platform Notion soared in popularity amid the pandemic, and, well, with rather a lot of help of some viral TikTok videos too, the company saw so much demand. The site was actually down for a short period, but is now up, running, and being valued at $10 billion, and has raised $275 million in a new funding round led by Coatue Management and Sequoia, with participation from Base 10 partners. Joining us now for more is Notion COO Akshay Kathari and CRO Olivia Nonabum. It is great to have some time with you both. And Akshay, first and foremost, paint the picture of what the mission is at Notion, what it is that you're managing to accomplish this sort of size of clients.
Thank you, Caroline. Delighted to be here. Notion is an all-in-one workspace that really brings together essential workflows like taking notes or sharing a doc or managing your projects or even creating your own knowledge base. And we bring it together into a single tool. What's really unique about Notion is just how much you can customize and modify the tool to the way you work. And when we launched a few years ago, we started to see a lot of individuals and startups really feeling empowered with how much Notion helped them work. And what we're seeing now is that we're increasingly getting pulled into the enterprise, where these large companies are really wanting the same empowerment in today's world.
Olivia, you're the revenue eyes here, so you are the money that raised $275 million, and I'm interested as to how you put that to work, how to ensure that that continues to grow the company and grow the bottom line too.
Absolutely. Again, thanks for having us, Caroline. It's wonderful to be here. So there's 3 areas that we know we want to invest in and continue to push forward on. The first is in platform and making sure we have that extensible platform so that people really can use us as a place to get entire flows of work done. The second is, as Akshay mentioned, in enterprise. So really, as our customers pull us up into enterprise and deploy us in thousands and thousands of seats, we want to make sure that we're there to make them successful and that we're putting the resources in to do that. And then third is international. 80% of our users are coming from countries outside of the United States, which is just wonderful to see. And we want to continue to lean into that and make sure that we're there for our customers.
Okay, interesting that, of course, you were just discussing there the sort of being there for your clients, ensuring that you got their back throughout. Akshay, what was interesting is you became almost too popular for your own good. In particular, you harnessed the strength of TikTok, which everyone sat at home, wanting to know hacks and ways in which to improve their productivity. It's amazing that TikTok became the way of doing that. Are you at a space where you feel you can just take on that sort of demand now that you've got that base load improved?
Yes, earlier this year, we invested a lot in our infrastructure to really accommodate the incredibly fast growth we've seen. We've grown about 5x just in the last year.
What sort of numbers? Where are you at, therefore, if you're 5x?
We're over 20 million users now. And what's really interesting here, Caroline, is that it's a product that consumers use, which is why it grows viral in TikTok. But it's also a tool that large enterprises like Adobe are using us inside their company to really make them more productive.
I'm interested also, Olivia, about, well, as you grow a business, you've got to make sure that there's the right culture in place, that you've got the right mission and also sort of morals. I know that you're part of Base 10's advancement initiative, looking at scholarships for HBCU students. How are you both set an example of a diverse team. How are you ensuring that continues to be diverse?
Absolutely. As you know, talent is what matters the most in any company and how you think about building a team. And I joined Notion just 4 months ago, and I could not be more impressed by the diversity of thought, but also the different places that folks come from and the innovation that springs up from having an international composition of the team and then just a different set of ideas. I would say also that we embrace that also in the community. So we engage with a number of entities that are out there aligned with our mission, also on the nonprofit side. And then from a customer perspective, we're incredibly diverse. As I mentioned, we're heavily international and really everything from startups all the way up into enterprise. So it keeps us on our toes.
Actually, of course, you're building a product for those that are working remotely in many ways, but then also coming back into the office. How are you dealing with that at Notion itself? Are you generally sort of outside of the office first and foremost? Do you have headquarters? I know you've been expanding offices internationally.
Great question. We were only 40 people in the San Francisco office before the pandemic happened. Today, we're at over 200 people across San Francisco and New York, but also Dublin, Tokyo, and our newest office in Hyderabad. And so very much we're using our own tools to stay connected, to stay informed, and to be able to really sort of push for innovation and really evolve our product into really being this platform across these different offices. And it's been really wonderful to watch how much the world has changed in the last 18 months. Today, like some companies want to be in office, some companies want to be completely remote. And there's a lot of companies who are in between those two. And so I think for us, we're just very grateful to be working on a product that is helping companies across these dimensions and helping them be productive wherever people are.
And from a revenue perspective, Olivia, where do you find the most opportunity lies? How do you think you'll evolve the business to be able to, is it from subscriptions? Is it from, what sort of ends up driving your bottom line, your profitability here?
Sure, absolutely. As you can imagine, we have had this hyper scale of growth, so we're getting actually pulled in a very expansive motion. So we see a lot of revenue coming from expansion, from customers who love us, who want to stay with us and grow with us, and that's wonderful to see. It's great to see the retention rates that we have, pretty unique, I would say,
what are they
and
at?
Just great intrinsics. Healthy. Very healthy. And then we, of course, are driving net new as well. So constantly, because people talk about it with their other colleagues, talk about it with their friends, we see more and more companies coming onto the Notion platform. And so there's a really good, healthy chunk of net new revenue as well. So I'm excited to lean into both of those. For me, it's just a very healthy business profile, and frankly, one of the reasons why I joined Notion.
And actually, I mean, lastly, what's competition like? Who do you see as your competition? Where are you competing against?
Long-term ambition, Caroline, is to be as ubiquitous as Microsoft Office and Google Suite have been. If you think about, these two incredible businesses that have been built over the last few decades, we really think Notion is this third generation of productivity software that can really get to truly being ubiquitous. It will take us many years, and today is a day of sort of celebrating how far we've come. But come tomorrow, we're going to be back investing into the product, investing in our customers, and really making sure we can really make ubiquity a reality for us.
Really great to have some time with you. We'll see how that ubiquity goes. Akshay Kathari, Olivia Nottebohm, great to have some time. Stay well. Have a good weekend. Meanwhile, coming up, the fight against climate change. Jeff Bezos shares his thoughts on what governments and companies can do to address the issue. We'll hear from the founder of Amazon Blue Origin. That's next. Meantime, Elon Musk's SpaceX has reached a valuation of $100 billion after a sale of its shares on the secondary market. That's according to sources. SpaceX already sits among the world's most highly valued private companies, along with ByteDance and Stripe. This is Bloomberg. That was the moment Blue Origin launched its founder, Jeff Bezos, and 3 others into space. He says the trip reminded him that nature is fragile and is now calling for more ambitious targets in combating climate change. Bezos told the B20 panel, hosted by Bloomberg's Francine Lacqua, that we need to adapt in order to improve the world.
We'll have more jobs of higher quality. Consumers will have better products. Electric cars are better than internal combustion engine cars. We can do that in every sector of our economy. We can make green steel, we can make green cement, we can improve our agricultural systems. We can return the natural world to the way it was 500 years ago.
Now, Jeff Bezos there argued that governments, businesses, consumers will all need to adapt, that countries need to be even more ambitious with their climate goals. Facebook, well, it's restricting sales of the Amazon, not just Jeff Bezos' Amazon, but the actual Amazon rainforest. Now, the social media giant says it's now explicitly prohibits the buying or selling of land of any type of ecological conservation areas. While one might not think people were selling parts of the actual Amazon rainforest, a BBC investigation found that huge chunks of the rainforest were being listed and sold on Facebook's marketplace. Now, the company now says it will review and block certain listings if they're in protected areas. And Beijing has fined the food delivery company Meituan $500 million for violating anti-monopoly regulations. The fine amounts to 3% of its 2020 domestic revenue. The company is ordered to improve its commissions mechanism, as well as ensuring the legal rights of restaurant partners. It was also told to step up protections for its delivery riders. Now, coming up, as pressure continues to build against Facebook, some are looking for alternative social media avenues. After the break, we'll look at one, now decentralized platform, how it aims to fix the current problems with social sites. That's next. This is Bloomberg. This is Bloomberg Technology. I'm Caroline Hyde. Now, the hits keep coming for Facebook. Thousands of users of social network's main site and Instagram app, they reported having trouble accessing the services on Friday. According to the website Down Detector, at its height at around 3 p.m. Wall Street time, more than 33,000 people reported problems with Instagram alone. One Monday, of course, Facebook suffered from a broad global outage that lasted about 6 hours. And, of course, it's been quite the week for Facebook. On Tuesday, Frances Haugen, a former Facebook product manager turned whistleblower, released internal documents and testified on Capitol Hill, outlining how the company misleads, accusations, of course, that it misleads users, and outlined its negative impacts. Her testimony added further fuel to the debate over whether big tech is just that, too big. Earlier, we caught up with Senator Mark Warner, Democrat of Virginia and chairman of the Intelligence Committee, on the next steps lawmakers need to take. Take a listen.
I've been on this issue now for 4.5 years, and it is, frankly, total irresponsibility that Congress has not done a single thing. So I would keep breakup as my backstop. I would start with data portability and interoperability. I mean, if you get tired of Facebook, you ought to be able to move all your data easily to a new site so you could actually have more competition. I think we ought to know what our data is worth. I mean, these services are not free. They market our personal information. We at least ought to know that. And this legal protection that's called Section 230 that basically allows Facebook to say no matter what happens on their site, they bear no responsibility. It's time for Section 230 to be reformed. So I would start with these actions because I do worry in a global economy when you've got, again, Chinese type competitors out there. We ought to start with reform, but Congress needs to act. My hope is that this week was that tobacco moment where maybe we're going to finally get our act together.
Democratic Senator Mark Warner of Virginia there. So what's the answer to the problems experienced with Facebook by us? One person thinks he has it. Nader Al-Naji recently announced he's the one behind BitClout. Now, it's a social network that is decentralized, lives on the blockchain DeSo, decentralized social. Current backers of the platform include none other than Andreessen Horowitz, Sequoia, Social Capital, Coinbase Ventures. Now, for more, I want to bring in Nader Al-Naji, the creator of DeSo, of course, artist formerly known as Diamond Hands. You're a man who now has come to the fore. Let yourself be known. And talk through us first, BitClout. I mean, it's sort of exploded in popularity. It's a proof of concept, you say, for DECO, the actual underlying blockchain. Talk to us about what DECO is.
Yes, absolutely. Thank you so much for having me. Yes, so obviously the Facebook outage has really shown how heavily we've come to rely on a single corporate entity for our information needs in the world. And the interesting take that we have is that the free market is going to break up Facebook, not regulation, through DECO, which is the decentralized social blockchain. So DECO, which we work on, is a blockchain that is custom built from the ground up to power social applications. And the goal is to decentralize social media in much the same way that Bitcoin and Ethereum are decentralizing the financial system today. Now, what's interesting about Bitcoin and Ethereum is they've done a very good job kind of showing what happens when you put financial data and transactions on an open platform, but they're not really good at powering social applications. They don't scale, and they're not really good for that. In contrast, DECO is custom built from the ground up for that use case and can essentially take what is currently today a privately held monopoly over content, which is what Facebook has, and instead turn it into an open utility that anyone can build on. And that's really important, and that's how the free market is essentially going to take over.
You've built BitClout. It has its own native cryptocurrency, Clout. How is that working? How does that incentivize people to use this particular dApp and create on it?
Yes, it's a great question. So BitClout is an app that's built on the decentralized social blockchain, the DECO blockchain. It's one of actually over 100 apps. And we actually started a $50 million fund called the Octane Fund to start funding even more applications to build on the blockchain. And that's because the future of social is actually thousands of developers with thousands of apps and thousands of feeds that you can choose from, a lot more competition and innovation, again, rather than 3 companies that control everything. But back to your question, really there's 2 disruptions. The first is taking what's currently a private monopoly and turning it into an open utility, taking the content, making it an open utility. But there's actually a second disruption that comes when you use a blockchain to power social applications, which is that you get access to money native or investment native features that are very difficult to do in a centralized capacity. So in particular, DECO supports NFTs and social tokens. And it also supports what is currently a social tip called the diamond, where just if you like a post, you can give a like, but right to the right of the like button on apps like BitClout, you have a diamond where you can give anywhere from a penny to $1,000 with just a single click. And that simple feature is actually very difficult to do if you're not, again, building on a blockchain native backend like DECO. And that's actually a new business model that's going to disrupt the ads-driven business model, where instead of monopolizing content to show ads on it like Facebook does, all the content is open, and creators make more money by directly interacting with their fans via these investment native or money native features.
First ever NFT social network, you call it. Funny you call it Diamond, of course, which Diamond Hands was your pseudonym. I'm interested, Nada, in why this helps perhaps against misinformation, against the spread of content that isn't uplifting, that is divisive. Because sometimes being divisive actually gets you more likes and could incentivize people to be earning more money.
Absolutely. And so if you look at content today, like I said, it's a privately held monopoly by a handful of companies. And that means that when misinformation is spreading, we, the public, the government, actually have very little transparency into how it's spreading and why it's spreading. And not only that, but private companies are actually often misaligned in the sense that they make more money when misinformation spreads because they can show more ads or more effective ads on misinformation than on real truth. And so with DECO, we really turn everything about the ads-driven business model on its head and make all the content open as a utility that anyone can build on. And when you do that, suddenly the best machine learning researchers in the world, without asking for Facebook's permission, can build really strong models to find harmful content that we don't have access to today. And additionally, when it comes to the spread of misinformation or things like that, there's much more transparency. For example, even the federal government can be involved in watching the spread of misinformation when the content is an open utility and actually doing something about it, rather than relying on privately held, misaligned companies that are not actually even trying to find it, often are trying to make it spread because that's their business model.
How would you do something about it, Nana, whether it be the government, whether it be the creators themselves?
Yes, so with DECO, the moderation problem, which is kind of what we're talking about, is something I've thought about more than any other aspect of the system. And the structure, when you have all the content on a blockchain, again, is actually thousands of apps made by people all over the world, not just in one country, not just in Silicon Valley. And when that happens, it actually becomes much easier to regulate in many ways, especially when the content is open. So for example, lists can be published of well-known harmful content, and the government can pass regulations that say, if you're showing this harmful content, you're liable to civil litigation or even federal litigation. Things like that can be done that can't be done today when all of the data is closed and private. And that can actually be much more efficient than, again, relying on private misaligned companies to police everything.
Nada, briefly, interestingly, you've attracted funding from the likes of Andreessen Horowitz, of course, who put money in Facebook to begin with. How do you feel the tide is turning in terms of wanting to see a more decentralized social media? Who is coming to your platform, not only the financial backers, but also the users?
Of course. Well, the crazy thing is BitCloud and the other 100 apps that have built on top of it have attracted a really diverse user base, not just crypto people, but also mainstream people. So Tyga, Antonio Brown post regularly. Many others have claimed their accounts, such as Diplo, Blau, obviously some investors as well, like Chamath and others. But really, I think what's shocked me is that obviously investors want to make money, and that's why they back things. But in the case of DeSo, I really think there was another angle, not just making money, but more about we need to move the world in a more positive and less divisive direction. And I think you'd be surprised at how much the people who are involved with the project, other than me, including investors, including users, really care about that mission and are behind it. And like I said, the free market is going to break up Facebook with new technology like DeSo. And that's always a better solution than if you have to come in and regulate something. So.
Nada Al-Naji, well put. DeSo creator, come back, full of energy and
love to,
focus.
anytime.
Thank you for your time. Happy weekend. Meanwhile, coming up, a golden opportunity for Southeast Asian tech. Startups from the region are benefiting from, well, China's crackdown on big tech. We'll discuss this more with Raj Ganguly from the global investment firm B Capital. This is Bloomberg. China's Horizon Robotics, the AI chip startup, was reportedly considering shifting its IPO to Hong Kong instead of the United States. Bloomberg has learned that the Beijing-based company is rethinking its plan after China increased its scrutiny over overseas listings. Horizon was looking at a possible listing here in the United States that could have raised as much as $1 billion. Meanwhile, China's regulatory crackdown has wiped billions off its tech stocks. So where is the money and the digital innovation actually going? Well, some say there's an opportunity in Southeast Asia. Step up to the plate. It would seem it's already actually started. To discuss, I want to bring in Raj Ganguly. He's the co-founder and managing partner at B Capital. It's a global investment firm focused on digital innovation, billions of dollars under management, and plenty of growth companies that you've been eyeing across the world. And Raj, at this moment, what positive opportunities are being built by China's own regulatory crackdown?
Thanks for having me on. I think that in South and Southeast Asia, if you look at areas like fintech and healthcare, there's a huge opportunity. Today, fintech valuations in the U.S. have been sky high, and frankly, I think fintech innovation in emerging markets like Southeast Asia has been far outpacing U.S. innovation in these areas.
Why? Is that because it's interesting today we heard that reporting exclusive to Bloomberg that maybe the White House here in the US is eyeing up some sort of regulatory oversight of cryptocurrencies and understanding how and who should be looking at them. Is it more clear already in Southeast Asia? Is it more clear as to what the fintech landscape looks like in terms of fostering innovation there?
I think what's exciting about South and Southeast Asia is that it's not clear at all. I mean, there's so much lack of infrastructure, the basic fundamental rails of banking are missing, and it really gives you an opportunity to build companies from scratch that are innovating on how things like payments and credit are being given. We're an investor in a company which is called Katha Books in India that does accounting software for small businesses. But they do the accounting software so they can understand how the cash inflows and outflows of those businesses work. And that then lets them lend to those businesses and helps banks lend to those businesses because credit ratings don't work as well in those markets.
What, as regulation grows up around it, how do you get an inside track? How do you understand what's going to be fostered? How do you ensure that you're on the right side, or the businesses you back are on the right side?
I think fundamentally for us, it comes down to, does it do well for consumers? You know, we think that governments understand that if you do right by consumers, I mean, we're making a lot of investments in companies that are targeting tier 2 cities in India and Indonesia. There are hundreds of these cities. I mean, India alone has over 100 of these cities. Indonesia has about 300 cities that we would call tier 2 and tier 3 cities. And people in these cities need access to goods. And you look at a company like Ula in Indonesia, it's helping small business owners, mom and pop stores, get access to inventory and credit that they wouldn't get access to otherwise. And we think it's hard for governments to justify regulating businesses like these in an adverse way, because they fundamentally help people.
Raj, if you're looking at Southeast Asia as really having a beneficial time at the moment, what about investment in China? What about the beaten up valuations? Are you there? Are you present? Are you eyeing on the opportunities?
We are. And we think China is still an amazing market in the long term. I mean, we invest in enterprise and healthcare. And in the next decade, you're going to have Salesforce and Oracle type businesses built in China. And our goal is to be partners with those kind of businesses, because they don't exist today. And I think if you take the long-term view, you'll see that the regulation in China is just a natural evolution of the fact that technology markets there are only 10, 15 years old. So of course you need data regulation. Of course you need antitrust regulation. And it's natural that it's coming now. And our goal is to be long-term focused on China.
But to rip up the script to such a degree that you turn an entire industry not for profit overnight, and I know you're not talking about education at the moment, but I'm referencing it. How do you think that China is making regulation that benefits the consumer in the same way that you're saying Southeast Asia is?
You know, I think that the ed tech market in China was a surprise for a lot of us. We were fortunate. We didn't invest in that sector, not because of government regulation, but we do think part of the government regulation was brought on by the fact that there were such immense amounts of money being spent to acquire customers that these businesses had to then find other ways to be profitable. And education is a core market. And while it should be profitable, there's still a huge role for government. On the other hand, we think healthcare, biotech, bio-IT in China is just getting started, and our partnership with the government there and our businesses there partnered very effectively with the government.
You are, of course, truly global, as I say, Singapore, Hong Kong, Beijing, locations in India, but you are also in LA, San Francisco, where you now sit, New York. What about US regulation right now?
You know, U.S. regulation has really been evolving very quickly with the new administration. And you brought up crypto. Crypto's a great example. You know, we've made our investments in the picks and shovels in crypto. We're investing in the exchanges that let people trade crypto, but we do think that there's a lot of regulatory uncertainty today. Getting the licenses is a state-by-state issue and a federal issue. And this kind of regulation needs to be streamlined. For the US to keep up with what's happening in crypto globally, we need more streamlined regulation. We can't have 50 plus regulatory frameworks in every single state.
Interesting that I'm not seeing Latin America there. We've got but like 30 seconds. Is that an area of opportunity, or just not at the moment in your viewpoint?
We think it's an area of huge opportunity. We've invested in Latin America. We will be in Latin America in an even bigger way in 2022. And we're really excited about what's happening in markets like Brazil and Colombia and Peru.
I love how global this conversation got. Thank you so much, B Capital co-founder, managing partner, Raj Ganguly. Great to have some time. Stay well. Meanwhile, it could cost you even more to get to the front of the line at the Disney parks. Disney announced it's going to charge guests as much as $15 to shorten the line for its most popular attractions. As part of its Genie Plus reservation system it introduced earlier this summer, guests can pick 2 premium rides at each park to skip the line. Price also varies depending on the day of the week and if you go on a holiday. Wonder if they do the same at Legoland. Meanwhile, coming up, diversity in investing. We'll hear from SoftBank managing partner, he's Shai Niata, about the investing giant's $100 million opportunity fund and what's more is needed to level the playing field. This is Bloomberg. about a year ago, SoftBank launched the Opportunity Fund. It's a $100 million venture fund dedicated to investing in underrepresented entrepreneurs. Now, I caught up with SoftBank Group International Managing Partner, Shu Niata, at the Bloomberg Invest Global Summit. Take a listen.
The Opportunity Fund is very different from SoftBank's traditional activity because it's truly predominantly an early stage fund. Early stage funds take years to mature. And so it's very early to decide if it's being successful or not. But what we like to do is experiment, and we like to experiment boldly, not just with a few dollars. We like to build teams that are addressing the challenge. So in the case of the Opportunity Fund, as I mentioned before, we've built a full team. It's about 10 dedicated people, more than half women, almost 100% of them underrepresented professionals in the world of investing, Black, Latino, and we're dedicated to seeing this strategy through. So this is phase one, and phase one is find great founders, put capital in their hands, help them grow, show that you can generate returns with a strategy that is purely racially focused. If we execute stage one well, there will be stage two and stage three and stage four, and we'll expand the platform and be even more ambitious. But the hard thing to do is to build the team and to focus on doing it yourselves right. And that's still the phase we're in. So that'll last another couple of years. And then we'll think about other ways to expand what we're doing within that space of founders of color. But so far, so good. A number of companies are raising subsequent rounds. A number of companies are growing really healthily. We're doing follow-on rounds in companies we invested in earlier because they're progressing well. So we're very encouraged by what we've seen so far.
Of course, what was so discouraging, I get my English right, to begin with, was that about, 1% was the stat of VC-backed founders are Black. Is that changing? Do you think that with your help and others that we're moving the dial?
No, we're not moving the dial. This is the first step on a very long journey. The path from here to equity is not overnight. It's probably generational. I think the important thing to do is stick with it. A lot of the magic of startups is you create companies that create value, and the people from those companies then create other companies that create value. And building that ecosystem that pays it forward is what creates the magic of San Francisco, for example. It's why it's so difficult to replicate. And so with these founders of color, what we need to do is stick with it. We need to fund companies through to liquidity events, have them fund other companies, create a flywheel and a community of founders who can all relate to each other and inspire each other and build with each other. But that takes time. We're in the very, very first innings of this journey, and we can't do it alone, frankly. I encourage other companies to follow the example we've set, not just to deploy capital to other people who are then going to deploy capital. That's the easy thing to do. The hard thing to do is to build an actual investment practice, and the reason it's important is the brand that SoftBank brings to these communities and these founders is much more helpful than the capital. They might be able to scrap together capital for here and there, but if they can say SoftBank invested, it validates what they're doing to employees they're trying to attract, to customers they're trying to sell to, and you have a number of big brands, big established financial services and other brands who can lend their brand in a similar way to validate these founders. That's much more powerful than giving someone else a check to then invest. So I think the template we've established is a very good one. Yeah, go ahead.
I want to talk about that validation, and this is a sensitive topic, and I want to address it with as much sensitivity as I can. But the Opportunity Fund, how many of those great entrepreneurs that you say you find and you want to put the capital in their hands want to be backed by the Opportunity Fund, or actually want to be backed by a more general fund, the Vision Fund? They don't want to be taking money because they're a Black or person of color founder. They want to be taking money because they're a great founder, no matter what.
Yeah, it's a very important point. I relate personally to that. You don't want to be at the kids' table. You want to be at the adults' table, so to speak. The good news in our case, which is why I think big firms have the same advantage we have, the good news in our case is we do not have an early stage fund. There's no other investment vehicle that would fund the companies at that stage. So in many cases, this is the entry into the SoftBank ecosystem for all these firms. And when they talk about where they got the funding, they just say SoftBank, which we love. It's a little irrelevant which vehicle it comes from. They say we have been funded by SoftBank, and that helps them recruit, it helps them sell, it helps them feel they're on the right path, it helps them tell their communities that they're doing something that's not too risky, which is a very important thing for a founder who doesn't come from the traditional background. So we think that validation is present even in the construct that we've built this fund.
SoftBank Group International Managing Partner there, Shu Niata. Now that does it for this edition of Bloomberg Technology. Stay with Bloomberg TV. My colleague David Weston And he's up next with Wall Street Week. I'm Caroline Hyde in New York. This is Bloomberg.